All right, this is November 2021 market update. And what we're going to do is just take a look at what the market has done over the last month or so, see if we can find any trends, any changes. Right away, we see that 68%, almost 70% of all of the stocks in our basket of stocks are above their 250-day moving average. And that is actually up. Let's take a look here just real quick. Yeah, that's actually up, specifically on the 50-day over the past month. And so that's really encouraging. I expect that to potentially continue. I think once we start getting Christmas numbers and holiday numbers, that can change. But for now, it looks like everything is trending upwards. Just so you know here, what you're seeing is in the green is when we have a positive change, and in the red is where we have a negative change, right? So, for instance, here CF, this particular stock, is actually lower. It was 23% above its 200-day, and now it's only 16% above its 200-day. But it is still above its 200-day moving average, but it is coming down. AT&T, I think, is interesting. This has been talked about a lot because of the soaring dividend. Whenever the price comes down, the dividend gets higher. We all know that AT&T is a stalwart of an American company. It's been around for a very long time, not going anywhere anytime soon. But the stock performance just has not been great. And you can see it here where it's fallen below its 200-day moving average, and it's falling even lower. Same thing with this 50-day. This is called a death cross when both the 200-day and the 50-day, when the stock price goes below both the 200-day and the 50-day moving average. That's called a death cross. When the 50-day crosses below the 200-day, it's a death cross. And so that's typically bad news for a stock, meaning basically that currently the stock price is falling faster than what it has fell in the past, meaning that it's probably going to continue to fall. At some point, I can imagine that will change, and that's a lot of the conversation surrounding the AT&T stock right now is get in right now when the price is really low because you'll get a great dividend. But we're not doing that sort of chasing. Just interesting to look at. Let's take a quick look now at the sectors. All right, so basic sector slightly up relative to last month. We see that only 29% of these companies are above their 200-day and 29% above their 50-day, which is it's interesting. Basic sector has not done very well. I think a lot of these are commodity type companies. So you'd expect that they'll be doing better, but I don't know what's going on. Same thing with telecommunications, slightly up. I think everything is going to be slightly up compared to last month. But we see 40%, almost half of the companies are above their 200-day and 50-day. Cyclical stocks, which are a little better than the basic sector, 38 and 47 respectively. Defensive, about the same. Energy has been way up, way up. I mean, look at this. A 2% difference between this month and last month. That is huge. We see that 94% of them are above their 200-day, 100% above their 50, meaning that these particular companies' stock price has gone way up recently. And same thing with banks. We see that 91% of them let's just say 90% are above both the 200-day and 50-day. which I really think energy and banks I think are really are what's driving this 70% because everything else is like 30 and 40. The Wow, so health is not doing bad. 60% above their 200 day, and then industrials. That's surprised. Did not expect that. I'm curious to see what's in industrials here. Let's see. We got this IRM, Raytheon, EMR, Paychex, Fastenal, IEP, and then just looking at their performance over the past month, 11%, 12%, 9%. Wow, Raytheon is the lowest number here, and that's the company that we're currently in. But on average, last 12 months, and I want to make sure, yeah, 5%, which is top of the sector. So I think maybe the rest of the sector is kind of catching up to Raytheon. It appears. All right, so let's keep going here. Real estate. Wow, yeah, real estate. So as of right now, it looks like energy is way up there. Finance sector is doing pretty good. Industrials are doing good. Real estate is doing well. And it looks like technology, it's respectable, but not quite as hot as energy and finance. And then utilities kind of in the same boat. So what this means is currently um, currently energy, real estate, industrials, and banks and finance sectors are really what's making the money. And so we can expect that maybe some of these less performing sectors will maybe do better later. I know that technology, a lot of the issues concerning getting supplies of chips and stuff like that in from China have been the issue. So maybe we see a resurgence in technology after Christmas, or maybe once they get this supply thing taken care of. As far as the cyclicals, I think what was the worst performing? Worst performing, I believe, is basic, and then I think cyclicals is right there. Yeah, so worst performing is the basic sector, and for us, that's Southern Copper, which, like I say, we're currently slightly down in, but it's been a decent investment for us so far, and so that's really good to hear because what that means is if the sector itself is the worst performing, and the company that we own in that sector is performing well for us, then I think we're in a really good spot. So here's Southern Copper. The average is definitely not the best, but not the worst either in the sector. And you see over the last month, it's up 6, but fell almost 12 in the prior 2 months. So there's definitely, I believe, going to be a lot of up and down for this particular sector just because I think the inflation, is really hurting things, and maybe the supply constraints is hurting things in that sector as well as a whole. We see here Southern Copper is 10% below its 200 day, and it's right at its 50, and so hopefully we'll be looking at Southern Copper coming up above its 200. I'm kind of curious to see what it's been. So it's actually rising. It's actually rising. It was 16% below last month. Now it's only 10% below. Same thing on the 50 day. It was 6% below. Now it's right there at the 50 day. So rising trend. I think that's going to continue. What that means for the rest of the sector, I don't know. but it is interesting to look at. Now, we do want to purchase more shares of Campbell Soup, which is the defensive sector, which uh, isn't the best, isn't the worst. The other is IP International Paper. We almost have a buy signal on it. And as you can see, that one is not performing very well either. Very close to, I'd say, the worst, as in the basic sector. So, we got some room to go. Let's take a look now at the best performing portfolios. So this is November down here at the bottom, and we see just a bunch of green. I mean, like dark green, kind of starting off here. And so what that means is the market as a whole has really done well over this last month compared to last month here, where we see a lot of yellows and oranges. So the best performing portfolio have all been right here at the top. See if we can get up there. So we're talking about the return, the alpha, and the up moves. And I think this is a trend. We've seen this now for the past couple months. Let's take a look at the 3-month setup here. So between August and November, the up moves has been the best performing. Let's go through and make sure. I don't think anything is going to beat 11%. That's a big deal. Yeah, nothing is even close. Nothing is even close. And there's a lot of negatives here too. And so let's check the prior 3-month period. And let's see where that was. A lot of negatives here. So I think we may be looking up. Well, there's a positive there. My goodness. So yeah, up moves. Yeah, up moves is killing it. So from June to November, which is basically the last 6 months, the up moves have really done well. Now we're currently following the down moves. Let's take a look at what that looks like. Let's go last 12 months. Wow, look at that. The up moves have taken over. Every month we've checked this, and the down moves has been at the top. And now we see that the up moves portfolio has taken over and is now the number one performing portfolio over the last 12 months. I think if we look over the past few years, though, down moves, when we go further out, seem to perform better. I'm curious to see now, as far as just volatility goes, down moves, pretty volatile. We have a high of 20%. And then we see a lot of these M scores here too. Then we know that this is going to be the beta portfolios, of course. They don't move around a whole lot. So, I mean, this is something to really consider. I think we definitely are seeing a trend here. Let's take a look at the up moves portfolio and just see what the differences are. And just really quickly, so up moves means that when there's a lot of selling and buying, when there's a lot of volume, when there's a lot of trading in this particular stock, the price tends to move up, right? Versus the down move portfolio, in which when there's a lot of trading, a lot of volatility, a lot of buying and selling, the price tends to move down the least, right? So the least number of times it moves down, if that makes sense. The odds of it moving down are less than all the other companies. I think it's maybe a better way to say it. All right, so here we go. So here's the up moves portfolio. We see Blackstone is there for finance, EMR for industrials. MPW is good. We're in that one. Merck, we're in that one. Valero, we're in that one. Consumer cyclical, we're currently in International Paper. They have PKG, don't know a lot about that one. GLW for technology. ETR for utilities, we're in that one. Consumer defensive, we're in Campbell Soup. They have, I forget, KMB is, it's the company that makes diapers. Kimberly something, I forget. Basic Materials, AEM, and then we have AT&T, which, as far as I know, hasn't performed very well, but they have a very high dividend, which gets calculated into the equation here. Show you what that looks like. So see, the actual dividend is 6%, and the way this is calculated is every month they take 6% of the total portfolio, divided by 12, and that is added to the return for the portfolio. So dividend matters. Dividend matters. And so even though price performance may not have been very good for AT&T, the dividend helps kind of make up for that. Let's take a look now at the down moves and just see what the difference is here. All right, so the program is calling for NWL, we're not there. IVZ, we're not there. CAH, we're not there. EOG, we're not there. MAC, we're not there. We do have International Paper. We do have Raytheon. GLW, we're not there. EMN, we're not there. PPL, we're not there. And then AT&T, or communications, so we're not there. So there's a big disparity on exactly what the program has in the down moves and what our portfolio looks like currently. I'm curious to see what the dividend is. Yeah, much higher dividend too, 7%. So what we're going to do is currently we do have a sales signal for Merck. The down moves portfolio is calling for CAH, and so we're going to take a look at the differences between CAH and Merck to see if it warrants switching out of those. In the meantime, I think we're okay. Up moves is currently what's kind of working right now, and our portfolio, for the most part, looks a lot like the up moves portfolio, except for 1, 2, 3, 4, 5, 6, 7. So, all right, well, most of them, some of them, half of them, we're in. The other half we're not. But I think we're doing okay. Let's see if there's anything else. Oh, there's something that I saw earlier that I thought was really interesting. This line right here is energy. Let's see if I can blow it up. Probably about as big as I'm going to get it right now. Yeah, so this is a 3-month, okay, 3-month period. And this is just showing the performance of the sector, all right? And this line right here is energy. That's how crazy the energy sector has really just blown up over the last 3 months. And the rest of these are just, all kind of in the same place, but nowhere near where the energy sector is. All right, that's it for the market update.